let's get straight into that because obviously the highlight of this morning was the Telstra result out for the half year. Andy Penn, Telstra Chief Executive, joins us now on the call. Andy, welcome back to ausbiz. Revenue down 4%, EBITDA down almost 15%, underlying EBITDA up 5%. What do you say to the market who have marked Telstra shares down back below $4 this morning as a result?
Yeah, no, look, thanks very much, David. Great to be on the show. And the current financial year is definitely a year of inflection because I think, as investors know, we've been going through this very significant period of transition to the NBN, and that has very significant financial consequences for the company. And you can actually see, as we move through the final transitional effects of that on our reported result. So, for example, the one-off receipts that we received were down 450 million. The commercial works that we've been doing are down 200 million. But what's actually coming through is in our underlying result, which was up 5.1% in underlying EBITDA and 55% underlying EPS. And so as we get through the rest of this financial year, we'll see our reported result and our underlying result come much closer together, right, and in line with the aspirations that we've set ourselves for growth in the future.
So this is a period where you're really cleaning up the NBN, aren't you? And that was always going to be the case as your T22 program came to an end.
Well, that's right, David. And of course, the decision to essentially renationalise the whole wholesale broadband network through the creation of NBN has ultimately had an impact of about a negative $3.6 billion impact on Telstra compared to the period before we started the NBN. And so that's been moving transitionally through. And so this is the last year, essentially, in which we see the effect of that. So we come out from what I call the shadow of that transition, and all the good stuff we've been doing, and from an underlying point of view, the productivity, we're taking out $2.7 billion worth of cost, the growth in our mobiles business, that's all going to come through nice and cleanly. And our ambition is to get underlying EPS growth in the high teens from FY21 all the way through to FY25, which is great news to shareholders.
Are you glad to get rid of the NBN so it becomes a much cleaner company to report on?
Well, I think it makes it a lot easier for investors because there are so many sort of puts and takes and impacts, but that's the nature of what we obviously has been important for us to deal with. But it is nice to be able to see that underlying performance from the results of all of the initiatives under what we call our T22 strategy really starting to pay off now. And as I say, underlying EBITDA up 5%, underlying EPS up 55%. We've increased the underlying ordinary dividend to 6 cents per share. So I'm confident as we look forward into the future, we're going to have a clean result and we're going to have growth.
Yep. Cost reductions more than the market expected?
Yeah, well, we targeted 430 million this year. We're at 254 million for the half year. So as you can see, that's really ahead of plan. We get to 2.7 billion cumulatively. We've reduced our headcount of direct and indirect by 27,000, which is about 1/3 of our headcount over essentially the last 3 or 4 years. And we've got another $500 million targeted in the next wave of our journey, which is what we call our T25 strategy, which builds on the end of this financial year into the future.
Okay, they're extraordinary numbers. Cutting 1/3 of your staff in the last 3 or 4 years. That's been a massive effort.
Well, it's been a massive effort. At the same time, David, that we've actually been growing our subscriber numbers. So particularly in mobiles, added another 84,000 net new subscriber numbers in the half. And it's a consequence, frankly, of the massive work that we've done on simplifying the business. You might remember we've made a commitment, we're going to reduce the number of plans that we have from 1,800 to 20, and we've done that. We've completely changed our digital environment. That's made a massive difference. The number of calls coming into our call centre from our consumer and small business customers is down 70%, 70%, since we launched T22. And we'll have all of those calls answered onshore, which I'm sure will make many customers happy by the end of this financial year. So there's been an enormous amount of work, and that's why I'm so excited, because as we come out from under this shadow of the NBN financially, the benefit of that is all going to flow through, and we're going to be able to build on some of the, I guess, the seeds we're sowing for growth in the future. Things like Telstra Health's revenues will be high teens growth this year. our infrastructure business that we announced some major investments in only a couple of weeks ago, the energy business that we're launching, and of course our mobiles business, which is the powerhouse of our growth.
Yeah. Free cash flow, 1.7 billion. Guidance between 3.5 and 3.9 billion for the full year. This slimmed down Telstra under T25, the next program. What sort of free cash are you going to be throwing out of the business?
Well, and the good news is that free cash flow is actually running faster, or running ahead, if you like, of our profit or our accounting profits. And that's because we've been bringing down our capital investment, notwithstanding the investments I just mentioned. But even with those, our D&A is running at about $250 million higher than our capital investment. So that's throwing off more cash. So not only does that mean that we're generating free cash flow and profit growth to support the dividend, but it also means that we've got the capacity to do other shareholder returns, such as we are at the moment. We're about 40% of the way through a $1.35 billion on-market share buyback.
Okay, dividend reinvestment plan as well. Back, maintain the interim dividend at 8 cents a share. Dividend policy going forward, will that change?
Well, there isn't a plan to change the dividend policy. As you say, 8 cents per share interim dividend. The underlying dividend, or the ordinary dividend within that, has increased from 5 cents to 6 cents. There's a 2 cents special dividend, which is related to the NBN one-off payments. They run off. We've got to increase that. Underlying earnings per share gives us the capacity. Of course, there's aspiration to grow the dividend over time. And then, as I say, because we're throwing off free cash flow in excess of our accounting profits, that gives us the opportunity to invest in projects like the big infrastructure investments I mentioned, like the acquisitions in health that we've made recently, like the investment in Digicel in the Pacific, as well as still have capacity to return money to shareholders.
Yeah. You've done all the hard work as Chief Executive, a massive amount of work. Are you going to stay around for the good times?
Look, I think I love what I do, and so I'm here to do the best I can for our shareholders and customers. The other thing, I've got a great team around me, and trust me, it's not all me that has delivered the results. It's all about them, and so we've got great succession in the team as well.
Gladys Berejiklian going to the opposition. Are you shaking your boots?
Look, what I would say is, Gladys is obviously a very experienced leader, and I wish her the very best in that role. We've got a very, very significant enterprise and government business. We just signed a major contract with Defence of a bit more than $1 billion. We've just signed up all of the Department of Educations in every state across the country. They're a very big and important customer. I chair the government's cybersecurity strategy. We do a lot supporting the government on national security policy, cybersecurity issues. So I think we've got a really good business, and I'm sure we're going to continue to do well.
And you played a very great straight back. I was pulling your leg and sort of being a bit half funny there, but a good diplomatic answer. Andy Penn, thanks for joining us. Congratulations on the result.
Thank you very much, David. Really appreciate it.
Andy Penn there, the Chief Executive of Telstra. For years, Telstra has been sort of much maligned in the market, saying, it's pretending to be a tech business. It's not. It doesn't run like a tech business. Well, Adam Dawes from Shaw, it is being run like a tech business now.
He just needs to wear a turtleneck.
Yeah.
And he'll be a tech genius.
I know the market's a bit disappointed. It's down a bit. But I think they get a bit confused with the numbers. But this is the last of the washout of the NBN. And now we have a streamlined Telstra going forward from here, which is a big cash generator.
Absolutely. I was really happy to hear that they're bringing all their call centres back onshore. And that's from the Aussie broadband success that those guys have had with that onshore call centres, and they're sort of now bowing to that pressure. Going to cost them a little bit more, but I think that's fantastic for the service going forward as well.
What has been Shaw's take on the result?
Look, our take was that the dividend was expected, so we were quite happy with that. Certainly the numbers did look a little bit lower, a little bit skinnier. But again, it's such a behemoth, and it's these one-offs that you just got to be careful with, because every year there's always a one-off somewhere along the line. But as you said, that NBN's now starting to run off. This is going to be the last of that sort of cycle going through. It'll be interesting to see how they go with the dividends next year, just to sort of push that forward. But look, Telstra is a good, stable, quality business in the portfolio. Yeah. So we were happy with the result.
Okay. What have you guys got it as at the moment?
I think we've got a price target around 410, 415. Okay. So where the market is at the moment. Yeah.
Okay. So basically a hold for Telstra for you.
Yeah.
One of the big criticisms of Telstra in the past has been they've never delivered really on their cost cuts and their forecast for cost cutting.
That was huge numbers.
And they do now.
Yeah.
They're actually being consistent on it and delivering.
Bringing 1,200 plans down to 20 must be able to just cut a lot of costs straight away. And then the poor staff, obviously. Markets like when you cut costs, right? But then you've got to still be able to run the business. And he said, well, we've been able to cut costs, but we've been able to grow our business as well. So I think that's a tick in both directions.
Using tech to do it. Chris Conway of Marcus Today also joins us on the call today. Chris, what did you think of the Telstra result?
Good afternoon, gents. Koshi, I would just reiterate some of the things that you have just been talking about there with Adam. The thing that stood out to me was the second consecutive half of underlying profit growth, and Andy Penn and yourselves talking to the discipline required to make sure that became a reality, and also delivering on what they said they would. Very, very important. And I would say, just as a bottom line, finally we can say about Telstra is that there's a clear line of sight for growth and improvement. And again, just leveraging what you were saying, we haven't been able to say that for quite some time. So I think the market will forgive the slight miss that Adam was talking to, and hopefully look past to what the future holds, that it seemingly is getting brighter and brighter for Telstra. Okay,
how do you see Telstra? It's dropped just below $4.
Yeah, like Adam, this would be a hold for us. I would still like to see the actual improvement in those results moving forward. And it has had a strong run in the share price. It has been trending very strongly for quite some time. So big round number, around $4. It needs to consolidate here at the very least and hopefully bounce off that level, but a hold at best.
Yeah, it is a massive company. You get reminded of it with these results. If they can get it right, it can be a huge cash generator.
Yeah, agree.